Welcome back to Talking Trade. Today we have a special edition featuring an interview with a top economist. Chris Kuehl is an economist with Kansas-based Armada Corporate Intelligence who spoke recently to MMAC's World Trade Association. Here is a conversation between Kuehl and WTA's Katie Henry.
Hello, everybody, and welcome to Talking Trade. My name is Katie Henry. I'm the Executive Director of the MMAC's World Trade Association. Today we have a good friend of ours, economist Dr. Chris Kuehl. Chris is the Armada Corporate Intelligence Chief Economist, working with a wide variety of private clients and professional associations over the last 21 years. He serves as the chief economist for several national business associations. He is also the economic analyst for the Fabricators and Manufacturers Association and writes their biweekly publication, Fabrinomics, which details the impact of economic trends on manufacturers. Chris is one of the chief editors for the Armada flagship brief, which hits several thousand businesses and executives 3 times a week. As a popular keynote speaker, he makes approximately 100 presentations each year to businesses and industry associations in the US and overseas. Chris has a doctorate in political economics and advanced degrees in Soviet studies and Asian studies. Chris, that's quite a resume. I'm happy to be able to talk with you.
Very good.
So can you tell us a little bit of why we are experiencing a little less distress going into 2023?
Yeah, this is something that has changed really recently. So if people were listening to the commentary even a few weeks ago, it was pretty gloom and doom. It was looking at 2023 as a year of serious recession, maybe starting in first and second quarter and extending through the year. But just in the last few weeks, you've started to see a whole series of data releases that kind of belie that assumption. And it began with this notion that we had probably reached peak global inflation, maybe in November and December. We started to see a decline in commodity prices. We started to see a decline in shipping rates. We saw a little bit of a decline in factory gate pricing. Not like this got back to where we were prior to the pandemic, but considerably less than what we saw earlier in the year and less than what had been anticipated for the coming year. From the trade perspective, probably the most interesting commentary was coming out of Europe because the Europeans had been expecting a really, really bad recession in 2023. They did not think they would see much, if any, growth. All of a sudden, the EU is saying, no, we think we actually are going to see growth. We may see growth of 1%, maybe 1.5%. A lot of the expectation for the US economy was based on the sense that we had done very poorly in 2022 and that we would see a decline. But instead, the numbers that came out said, wow, we're more resilient than we thought. We're at about 2.3, 2.4% growth. That's just the first iteration. We'll probably see that number go up a little bit in subsequent versions of that GDP assessment. So we're seeing a lot of I guess, encouraging news on the horizon. Not that we're without concerns. I mean, the Purchasing Managers Index has often been used as kind of a shorthand for where the industrial community is globally. And right now, we're sitting on about 22 or 23 countries in contraction. They are slightly below the 50 line, which kind of separates expansion from contraction. But so far, they're not deep in contraction. They're mid to high 40s, which means they're within striking distance of getting back above 50. And then you have some notable exceptions. India is one, Mexico is another, that are still tracking in that 50 category. The US is at about 46, which is getting a little close to concerning, still not in a bad place. So going forward, I think we're probably seeing a better outcome for 23 than we initially anticipated, seeing numbers that look a lot like we saw in 2018, 2017, even 2019. And if you remember back to those years, which gets hard these days, we've been so whipsawed by, the 2020 mess and then the 2021 recovery. But if you remember back to those days, the world economy probably growing at around 4 or 5%. The U.S. economy was in the mid twos, and that seems to be where we may end up in 2023. I think it'll start relatively slow, probably see pretty anemic growth in the first quarter, but that's traditional. I mean, we almost always slow down in the first quarter, and then we start to speed up in quarter two, then start to hit our stride in quarter three, quarter four. For the trade community, the number one concern continues to be supply chain. And when will we see China come back to normal? What will that look like? Is the world really ready for China to come back to normal? Some of the problems we dealt with in 21 may resurface. If China starts to produce again and ship again, well, we're going to be right back to those port congestion problems we had in 21. On the other hand, we've diversified with trade. There's a lot more trade coming out of Vietnam, out of India, out of Latin America. The reshoring thing is real. We've seen $1 trillion worth of that in the last year. So, not that we're without concerns, but we are beginning to feel mildly optimistic. A typical economic assessment. I'm cautiously optimistic. It's sort of like, I think it might be okay, but if it goes terribly south, I won't be surprised.
Okay, Chris, thank you. Can you talk a little bit too about, you mentioned China, kind of what's happening over there with Taiwan? Is there anything
Yeah,
to be kind of concerned about? You hear about it quite a bit. What are
yeah.
your thoughts?
China continues to be a pretty live conversation because we're still trying to figure out how they're going to come out of their particular lockdown strategy. They finally abandoned that and has started to reopen, but not without problems. You still have the tensions that exist between Taiwan and China, between Taiwan and Japan. North Korea plays into this conversation as well. And China is becoming more engaged in the conversation around Taiwan, but it still does not feel like they're ready to tempt repercussions by doing anything dramatic. The conversation is around putting economic pressure on Taiwan, basically trying to continue to lure them into wanting to be part of China. And I don't think that's ever going to happen, but it keeps the conversation going rather than moving towards a military response. The biggest issue for China is whether or not they resume their place as the global supplier. And they will to a large degree because there's just a lot of history built up there. But they have, because of their own internal issues, COVID and the like, they have lost a little bit of that impetus. Other countries are trying to pick up the slack, but they have their own inhibitions. I mentioned India and Vietnam. Vietnam has picked up a lot of business, but they're running out of power generation. They don't have enough energy now to support that expansion. India has always had a very poor transportation system, which interferes with their ability to participate exclusively in world trade, and the bureaucracy in India is legendarily bad. So there's no country ready to replace China, but I think you'll see a lot of nibbling at the edges.
Okay. You mentioned India, the infrastructure, and that obviously is going to take quite a while. It's something that
Right.
they're working towards, but okay. But there's
Yep, there's
opportunity.
money being poured into it. There's US money being used to improve some of the routes to the major port cities, and it doesn't take a lot. I mean, it's basically trying to upgrade the ports and upgrade some of the rail sector, and you've got an effective support system for trade. I mean, the major trade cities in India, Hyderabad, Chennai, they're it's not like they're going to try to revamp the entire country, but even so, it's going to take money and it's going to take time. And the politics of India it's always roiling. I mean, you've got lots of different factions and everybody competing. We're familiar with competition in a democratic system. It's really hard to move in a particular direction because you've got everybody wanting to go in different directions at once.
Got it. Can you touch on a little bit about the energy crunch that we've kind of been going through? How's that looking?
Yeah, that's beginning to ease up a little bit. We're not seeing the high prices as far as oil is concerned. At the beginning of last year, it was $124 a barrel for Brent crude. Now it's in the high 70s, low 80s, more days than not. We're seeing a lot less stress in Europe. Europe was not sure they were going to get through the winter with the energy that they had. Now they're confident that they will, that they've got enough in reserve to get them through the spring. We are beginning to see natural gas prices come down. The notion that we would be unable to replace Russian output has been disproved. We have found other sources, and not that these are all reliable. I mean, the Europeans are have been forced to deal with places like Libya and Algeria, which were countries they didn't want to do business with before. We're even looking at doing business with Venezuela, which we haven't done for 15 years. But it's the necessity of providing those energy resources. And you're even seeing kind of new life for things like nuclear power. The French have proven that, hey, it works. We've been dependent on it for our energy for quite some time. And while everybody else was in crisis over the oil and gas interruption from Russia, we kind of skated right through it. And now the Germans are like, I think we'll rethink our nuclear plans.
Okay. Transportation logistics costs?
They are coming down. They're coming
Did they get a
down.
little bit better?
A little bit better. We were looking at something like $23,000 a container for a while. That's down now to 11, 12, 13,000. Not as good as it used to be. We used to see container prices around 6 or 7, but we're heading in the right direction. You don't have the capacity crunch that you did have. Trucking has calmed down quite a bit. We were looking at 14 loads per truck at the beginning of last year. Now we're down to 4. The rail sector is kind of getting back to normal. There was some concern about the freight rail strike, which is now dissipated. That has not been an issue. Still have the issue of labor negotiations with the West Coast ports. The ILWU still talking with the shippers, but that has often been a labor dispute that gets carried away and results in a strike.
Awesome. Well, Chris, anything else you want to add? Anything else to watch for?
I think we're in
Okay.
good shape. I mean, it's one of those cautionary years. There's as many things to be optimistic about as there are things to be pessimistic about. I think the issue right now is to pay very close attention to the sector that one is in. There's going to be some sectors that are booming. There are some sectors that are not. For example, automotive continues to surge in the US. Aerospace is starting to surge. Agriculture will probably see a lot of growth in the coming spring. Hotel hospitality work still in recovery, so it's kind of a mixed bag. There's something for everybody. The glass half full crowd and the glass half empty crowd.
So it's definitely sector driven. Long story short, a slowdown or a recession?
I
on the
don't think we're
horizon?
heading for a recession. I think we'll probably see a fairly slow start to the year, but not falling into serious negative territory. Even if we dip into negative numbers, I think they'll be very small and relatively short-lived.
Okay, well, thank you, Chris, for your insight. I appreciate it. Thanks for joining us on Talking Trade. And we'll
Thank
see
you.
everybody soon. Thanks.
All right, very good. Thank you.
You've been listening to Talking Trade, sponsored by MMAC's World Trade Association and Michael Best Strategies.